So, hi everyone, thanks for being here. The idea today is I'm Raphaël Compagnon, Executive Director at Edmond Rothschild, in charge of tech and digital. The idea today is to speak about new space and fundraising. First, I will just go back on a few facts and trends on new space, and then I will just talk about new space and fundraising. First, a quick word on Edmond Rothschild. This is an international family-owned bank focused on entrepreneurs, organized around 6 complementary businesses. So corporate finance, private banking, real estate, asset management, and private equity. Concerning corporate finance, we do have a pan-European focus. We are 50 bankers in France, based in France, with like specialties like M&A, debt and equity financing, and as well real estate. Our focus of deals is from 10 million euro EV, and as well for and ranging like above 1 billion euro. For fundraisings, we are starting from like 10 million euros, and we starting January from Series A, and the idea is to be alongside the entrepreneurs like in the long term. Concerning the deals we did in space, we did 2 deals, like I will come back on 2 deals. One is CLS, sold to CNP. We advised Argent, CNES, and Ifremer. And as well on fundraising, we advised Kinis, which was a 100 million euro fundraising with as lead investor BPI, CNES, and CLS, and with as well investments from Thales and Emeria. Coming back on new space, some facts on this. New space will be kind of a big and massive sectors in the coming years, especially till 2014, with like a surface of above 1 trillion euros, dollars, sorry, and with 50% of the of the market will be captured from connectivity. So to be one major stake for the new space economy. Concerning the investments concerning the funding of R&D, generally, historically, it came from governments, especially when we look to the data. 90% in 2010 came from the US governments, and now we have more and more the share of private funding growing, especially investment from VCs and private equity in private companies, and like now is for the R&D is reaching between $5 and $6 billion each year, and with the investments now going to more LEO projects. When we look to where does this money, this private money, go into investments, it goes now from GEO to LEO. Historically, GEO constellations focused on satellite communications and as well on television coverage. Now, over the past years. Now the money is flowing towards LEO projects. Why LEO? Because now launch costs are far much lower than before, and as well the cost of production of the satellite is as well lower. So now new space is more cheaper and accessible to companies and nations in general. When we look to kind of trends we can watch, and we guess it's gonna orientate investors. So we have asteroid mining, the ability to extract rare metals and water and so on from near-Earth asteroids. Then we have Earth observations, which is like technology enabling to track the weather, climate, and maritime data. We have space debris, which is the ability to monitor the debris, and as well, when satellites could collide, so it has to be managed. We have as well space tourism, developing access for private citizens to space, as well to space adventure and exploration. The fourth one is the ability, the fifth one is like lunar landing. So that's a fifth trend. Then we have deep space observation. So it will be like long-term mission to beyond lunar and toward missions like Mars. And as well, we have satellite internet. So we all know that connectivity will be a major issue. And last but not least, we have a satellite launch, which is a very, very competitive market, and where a lot of money is flowing. When it comes to fundraising, in general, if we try to map investors, we in general mapping investor in function of the maturity of the projects, so the ability to generate revenues. Is the company is pre-post revenues? Does the focus is like R&D? And then what kind of investment tickets we do have with counterparties and investors we are talking to. And then if we try to map a bit deeper this money, we have first institutions and subsidies which play a huge role as well from depending on the political will of states. Then we have BA venture and family offices. And then more and more alongside VCs, venture capital, we do have corporate venture. And if we look to like a certain number of new space deals as well, we and deep tech in general, we do have the investment for corporate because they have end market approach. So they are very familiar with the partnership, and they try to push in general deep tech subjects. And last but not least, but for more mature projects, then we have the private equity. But in general, for this kind of guys, there will focus on infrastructure project type, or that's it. And if we look to example of investors we could find in space in general, like for European projects, well, starting from institutional, we do have investors like BPI, which is very active for financing in France, Definvest, which is linked to the defense space, and European Investment Bank, which is always helping all the projects in this field. Then if we look for example of names for family offices with a kind of venture approach, we have in the UK guys like C5 Capital. They do have a focus to securize the data ecosystem with a focus of cybersecurity, cloud, and space as well. And in terms of the French corporates active in the new space and space field, you have Airbus Ventures, Thales, Telsat, and Emeria, who are helping the industry and trying to push new projects. And when it comes to venture capitalists, we do have a lot of more and more funds raising funds and specific funds, but still, when we look to the European space, there is a lack of sufficient funds to fund the European economy because they have like very specific focus on seed and Series A in general, and you have more and more like Cosmic Capital, which is a kind of funded backness. We have Primo Space in Italy, Serafim in the UK, and some deep tech funds as well, trying to invest in funds. Recently, you had a lot of investments coming from Xange or Elia or 360 VC. And you have US investors as well, like REE or Khosla Ventures, Space Capital, which has been recently very, very active in the space. And when we look to private equity, recently in Loft Orbital fundraising, you had BlackRock being active. When we look to the timeline of a fundraising process, in general, we have a kind of, you need to have very defined milestones when you try to raise funds. One of the most important phase when you raise funds, to be fair, is preparation, because when you are on the market, then you need to entertain and to maintain the momentum with investors, to be quick with Q&As, and the ability to show that you have a very clear roadmap to deliver. And when it comes to the documents you need to prepare, this is maybe obvious, but you have the IM and the teaser, all the documents you need to prepare to tease investors. And the more and more you have a kind of documents like VDD, vendor due diligence on technical part or commercial part, it will help a lot, especially when you are on the holidays of the project. It helps to have a kind of letter of interest from a commercial letter of interest from partners. It's gonna help investors. Or as well, a kind of like R&D or patents on the table. Then this phase as well is important to refine and select and test the different investor spaces. And in general, it's always good to leverage on the more legit investor, especially when you have a European project. It's always good to leverage on like space-specific investors. Then, because you will have a lot of corporate ventures or general investor, be kind of follower attitude, depending on the the stamp you're gonna get from the legit investor in the industry. When it comes to the phase one, now when you interact with your investors, then once you have well prepared your deck and all the Q&A, you need to be very fast because investors are focused and you will try to avoid them to skip your project, and because they have limited timeline and project or resources depending on teams. This phase can last between 6 weeks and 2 months, depending on the maturity of the project. And then once you collected all the term sheets and letter of interest with terms, you can just go to with the selected investor to the due diligence phase, where they gonna go deeply in the due diligence with data room as well. So they're gonna explore the data room, and as well you have reports to provide. They will do that, and last but not least, they can do as well risk call. So if you have in the prep phase identified partners you can leverage on, because investors do like to know about your networks, about the ecosystem you can leverage. So it's good to have like kind of commercial ref calls list prepared, or technical partners ref call list prepared as well. And last but not least, the finalization phase, which is final negotiation on the terms, and as well signing and closing of the fundraising. And one last slide I wanted just to show. All the terms you're gonna get with investor will be done through the shareholder agreement. In general, you have 2 types of parts in the shareholder agreement. All the discussion around governance, so composition of the board. One topic important to discuss is revocation of chairman, and as well list of decision what you are allowed to do on an operational point of view. So all the kind of floors and figures you need when you need to approval from investors. And then all the discussion around liquidity, of course, with a kind of unlocked period, liquidity process. One important as well point is preferred liquidity as well, because when you have a risky project, investors like to have a protection at some point and some yields, and as well the ability to have a tag along and drag along when it comes to the exit. And one topic just to finish is good levers and bad levers. A startup project is depending on founders, so they will try to frame and border the involvement of founders through the bad levers clause, which says that they can penalize a founder if they leave the project, and or just what happens to the shares if there is a problem for the health, or if there's the death of the founders. That's why for my presentation. So I don't know if you have questions, but thanks for your attention. Yeah.
Cheers, thank you. I wanted to ask you, you mentioned there the VC ecosystem in one of your slides. What are the most typical exit strategies and scenarios from new space projects for the VCs?
Well, depending on the stage, but one obvious exit is IPO for VCs, and then when it comes to the maturity of the VCs, they can try to exit at a later stage when bigger investors want to clean the cap table as well. So that's two main strategy, and then depending on the maturity of the project, you have kind of strategic exit possible, but depending if you have a kind of a specific brick, which is a kind of a e-table by a strategic.
Any other questions? Thank you very much.
Thank you.